Sweet. Okay. Okay, so let's get started. This is the 30th of March, so it's the last webinar of the month. I hope you're all doing well. We had a very, very good month for signals. We're up or closing the month, I think just over 11% from what I've got in my memory. So yeah, definitely not a bad return. So let's see how this month goes or next month goes. Open trades, we've got the Aussie-New Zealand. So this was a trade I called earlier in March. Now it's not been very good, to be quite honest with you. It's been one of those trades that's just been a pain to hold. Now, I'm still happy to hold it because the price action we're seeing isn't anything out of the ordinary. It's very, very common on the Aussie-New Zealand, particularly, to see sideways movements. So it's a it's a very typically range-bound market. The fundamentals are still here. So we've got the Reserve Bank of New Zealand remains the most hawkish central bank in the G10, maintaining a restrictive stance with no immediate plans to cut rates. In contrast, the Reserve Bank of Australia has already initiated rate cuts amid election-driven fiscal expansion and disinflation. This divergence in policy outlook and fiscal risks favors the New Zealand dollar outperformance versus the AUD. So the fundamentals are there. We've still got Danske Research that's in a short position with us. Their position is much larger than ours because they're going for more of a position style. But we're sort of just riding off the back of the trend and off the policy divergence. So it's very straightforward. If this trade doesn't work out, I will more than happily continue going in for short positions until the dynamics change because that divergence in policy is very, very good for driving the markets. It's exactly the same reason we're in Euro Swiss. So Euro Swiss has been a great asset to trade for quite a while. So basically, since we saw the stimulus in Germany drive up the euro and the ECB come out of a less restrictive policy, this market has been very, very easy, really, in terms of finding bullish trades. So I think we had three trades or four, including this one. We had two wins and one stop loss. So we're just going to see how this one develops. Again, just for the macro reasoning, the Swiss National Bank has surprised markets by cutting rates as and signaled a willingness to getting my words twisted, and signaled a willingness to ease further. Citing disinflation and soft growth outlook, the ECB, although preparing to cut, is expected to move later and more cautiously. The divergence in timing and policy bias favors the euro appreciation over the Swiss franc. Additionally, with global risk sentiment stable, the Swiss safe haven bid is diminishing. So again, trading off the back of policy divergence and the markets, although we saw a sell-off in the equities last week, the risk sentiment in the market doesn't seem to be very elevated. So we're seeing quite stable sentiment. So we're not really seeing many alarm bells going off. We're seeing the euro continuous upside movements after a small pullback. The Swiss is still moving sideways. There's not really anywhere for the Swiss to go, either sideways or it will come back down and correct the upside we did see. I don't have any faith that the Swiss can continue to the upside with any certainty, really. So I'm quite happy to hold Euro Swiss shorts. The S&P, I am in this in a in a personal position for a long-term trade. So I'm not going to go over that just yet. Euro dollar, we've discussed Euro dollar in depth, well, kind of in depth, in the past couple of webinars. It's been a hot topic because it's obviously one of the most traded assets or one of the most traded currency pairs. So the situation with Euro dollar remains neutral in my view. You could argue the short side, which is what I've done on my personal portfolio. And the reason is because of a couple of things. Although the euro is strong, I'm not going to sit here and say the euro is as bearish as it was previously in the past, since sort of September last year until January. We've still got this huge upside here to correct. Normally, I do like to see these types of movements get corrected. And it's just because we've had very, very strong impulsive moves. And, if you're an ICT trader, you could argue it's an FVG or you could argue it's an order block, whatever you want to call it. I don't really care. The idea remains the same. So we're looking to get a correction of this move. And again, although the euro is strong, it's not necessarily got much to continue a drive upside, especially compared to the US dollar. So again, referring back to the German fiscal stimulus we saw that really, really benefited the euro during this period, along with the less restrictive policy by the ECB. That's about it, and that's already priced into the markets. That's not new news anymore. It's done. It's happened. It's over. So the only real place for this market to go now is to the downside, unless we continue to get positive developments in the euro data. There isn't any steam left to continue higher. Pairing this along with the potential for the US dollar to gain some short-term ground, I do view euro dollar as a short, but I wouldn't say it's a huge macro-driven high potential trade. It's more just if you're willing to sit through some chop for a little bit of a gamble, it might be for you. Like this one, it's not a huge position, 1% risk, and we're just holding it, and that we'll see. So, we'll see what happens. So no big deal there. Euro dollar, sorry, dollar yen has been bloody awful. If I'm perfectly honest with you, I'm not sure who's still in this trade, but I did call this at pretty much the start of this month, back on the 12th. So it's been a while, and it's done pretty much nothing. So, well, actually, I say nothing. I mean nothing in our favor. It's essentially just continued to climb higher and higher into drawdown. Again, it's not as bad as it sounds because we take all our trades at 1% risk, so no big deal. But the reason I'm still holding this trade, I didn't cut it earlier, is because I still really love the yen bullish idea. I still think that's going to come into play. It's just a matter of time. So I've been saying this for a while. I think we are going to see a huge turnaround on the yen. So again, I don't know how long each of you have been in the Discord or you've known about me, but one of the narratives I've had was first I was very bearish euro dollar back in the end of August. I called that short. Now I'm looking to take the yen long. But this one's a little bit more complex because the Bank of Japan is very, very slow to act and they're typically pretty secretive. They're not a central bank that really give much information. So we've got to use the data that we've got to determine what we think they're going to do, which is obviously what we do as traders anyway, but it's just a little bit more, we need to be, oh, what's the right word? I guess we need to guess a little bit what the Bank of Japan, I guess is probably the right word. So what I'm trying to say is I still think this trade has potential. I think we are going to come to the downside. We might get stopped out here, depending how the markets go and depending on how next week goes. We've got a busy, busy week next week, but we're going to go into the news slightly later. But yeah, the general idea, euro dollar short, even euro dollar yen shorts and yen crosses shorts in general, I think is a great trade. So what we've seen happen here on the daily time frame, 200 moving average is above price. We're just rejecting it slightly here. So I mean, we've got pretty much no more room for this market to come any higher. So we'll see. But yeah, there's nothing we can do at this point. There's no point cutting the trade here after all this way too. We may as well either let it hit stop loss or let it come down and start playing in potential profit. Now, moving on to trades for the week, or potential trade ideas we could take this week. First of all, we've got Dollar-CAD. Now, I've been very, very on the sidelines with Dollar-CAD recently, mainly because I just didn't have much clarity. And this isn't a trade I'm going to take straight away. We need, again, we've got some things to pay attention to next week, which I'll get into. But overall, I think Dollar-CAD has still got some potential. And the reason I'm not 100% certain just yet is because the US and Canada are still in the middle of a trade war. Canada's economy isn't amazing, to be quite honest with you. The numbers, the data isn't anything that I would be overly willing to go long for a significant period of time just yet. We've also got, or on the other hand, we've got oil that is making a comeback. So we go ahead and have a look at the price of oil and how it's moved recently. It's definitely gained some ground, but the market, in my view, is still bearish. So what this could be is just oops, wrong tool. It's just very simply a 50% pullback before oil continues to come lower. I don't know, which is, another reason I just want to wait and see how this develops next week. So just to quickly read off the economics for this one, we've got the Federal Reserve has Federal Reserve has reached peak restrictive policy, with market focus shifting towards an easing cycle later in 2025. Canada's domestic fundamentals are solid, with stable external balances and strong fiscal management. The Bank of Canada is likely to ease more cautiously than the Fed. CAD is further supported by resilient oil prices and longer terms of trade, while structural US fiscal concerns weigh on the USD. So on paper, it sounds great. It sounds like a very, very easy trade to take. Technicals also look really, really nice. So if we just do what we always do, and we look here, we take the previous high, we take the previous low, we draw the fib. This is in our golden zone. We've got the 200 moving average above price, and we could look, just as we were talking about earlier on euro dollar, we could look for this correction back lower towards the 1.36 level. But again, this is very dependent on next week, which I keep saying, but we'll get into that shortly. Next one is the pound yen. So we took a long on pound yen last week, and that was great. I think we made, what was it, like 1.1%, something like that. We made a little bit of money on pound yen, so that was quite nice. But I still think we are definitely bearish. As I was saying on the dollar yen, I think the yen pairs are doomed, to be quite honest with you. So just quickly, the reason I'm saying, or the reason I'm making it out like it's such a big deal, is if we look here on the monthly time frame, and you can do this on Swiss yen, CAD yen, pound yen, dollar yen, all of the yen crosses really, you will see that we've essentially just had a non-stop rise for the past couple of years. So this was back in 2020. This market has just rocketed. And that's because the Bank of Japan was in negative interest rates. So it was essentially it was what we call a carry trade. So you could have bought any of these yen pairs and made money for just holding because of the interest rate differentials, because major central banks will have had positive interest rates. The Bank of Japan had negative interest rates, so you will have been paid that interest rate differential for holding. So it was very, very profitable to do. But that landscape is changing now. It's already changed within Swiss yen. So the Swiss National Bank cut their rates last week, I think it was, and their rates are now at 0.25, whereas the Bank of Japan is at 0.5. So you will now get paid to go short there. So it's just a matter of time of waiting for the Bank of Japan to actually take some action and start or continue hiking rates and back to a normalization. But anyway, back to the point. If we use the weekly for this one, so this one again, it's going to be a little bit precarious because I would use the weekly just because the technicals are a little bit more simple on here to digest. So if we look, we've got this golden zone where prices were already rejected 2, 3 times, depending on exactly how you want to look at it. Previous resistance here on 2 weekly candles, high, low, very simple. And again, it does line up with the fundamentals. The Bank of England is expected to cut pretty soon. And when I say soon, obviously it's relative, but it looks like it's going to be the second half of this year, which we are coming into soon. I mean, we just finished Q1, so the second half is coming. The Bank of Japan has shifted away from ultra loose policy, exiting negative interest rates and yield curve control. This marks the beginning of structural normalization path for the yen. The Bank of England, on the other hand, is expected to begin cutting rates in the second half of 2025 as inflation softens and fiscal tightening looms. The GBP is also vulnerable to the UK's fragile growth profile and fiscal changes. So as I've been saying, I mean, again, I've been on this high horse for a while. Or I'm not sure if high horse is the right word actually, but I've been on the path for a while that the pound is eventually going to be doomed as well. I think at some point we could probably make a lot of money by shorting the pound, but we're not quite there yet in my view. Anyway, moving on. So just to hedge a little bit of the dollar weakness. So just to quickly give you an idea, the reason I'm a little bit mixed on dollar is because I think we are going to get much lower dollar prices in this year. And again, we are expecting the Fed to cut rates later, but short term, I think we are due some sort of pullback. Now, whether this is just to this fib level within the golden zone, whether we come up and correct this whole move, I don't know. And that's why I just like to hedge a little bit of that risk on the dollar. So I don't want to just go short in the dollar and then the market move up here. I go short here, I'm shorting here and then shorting here. That would be very silly. So what I'd rather do is take a long position on the dollar and look for a potential higher move, and then we can hedge off with some shorts wherever it makes sense and follow the more of the macro play. And that's the idea behind the US dollar SEC. So this is the weekly time frame. Again, we're using a higher time frame for this one. But we could. I've also seen a couple of messages in the chat, I think, earlier. So if there is any questions, feel free to drop them in, and I'll check them out. Let me just find the brush. Where is it? Is it here? No, here. So we've got a very, very clear level of support. I don't think anyone can deny this. Again, it is the weekly time frame, so it's a significant level. So let me just find, here we go. So the Swedish economy is experiencing weak domestic demand, softening inflation, and the Riksbank is under pressure to ease further. Meanwhile, US macroeconomic data remains solid and Fed easing is delayed. Monetary policy divergence, weak Eurozone growth, and trade war risks weigh on the SEC. Now, this is going to be tricky because technically it looks okay from a broad view, but actually getting an entry seems a little bit more daunting. So we saw a little bit of hope here in the past 2 weeks where we had two bullish candles. Maybe that's when we could have seen some upside here. However, last week we saw a pretty bearish candle that I don't know if I really want to buy into just yet. So again, we're going to have to wait. Now, just before we continue further, I'm actually just going to go into what we've got coming this week, just so we can finally get that out of the way. So let me just put this on all currencies. So we've got Monday the 31st, we've got manufacturing PMI for China. Nothing too much on Monday. Tuesday, we've got retail sales for Australia. We've got the interest rates or cash rate at 4.1, so that will be the rate decision. We've got the statement as well, which will be impactful for our Aussie-New Zealand trade. We have got the CPI, so inflation for Europe. We've got the President Lagarde speaks for the ECB. We've got manufacturing PMI, JOLTS. We've got ADP. We've got inflation for the Swiss. We've got unemployment claims for US. We've Fed Chair Powell speech, got unemployment rate, non-farm payrolls, average hourly earnings, employment change, employment rate. So it's a very, very busy week. So it's not something I am wanting really to be too active in because it could be very messy. We've also got tariff news. This is what I was talking about earlier with the Canadian dollar. We've got tariff updates coming. I think it's the 2nd or the 3rd, and I can't remember exactly which day it is, but it's pretty soon, which again will be very impactful for the euro, the Canadian dollar, and possibly the US dollar, depending on exactly what is said. It could be nothing, but am I willing to take the risk? Probably not. Euro pound, I think this is also a great opportunity to get short. So euro pound is probably one of my favorite pairs to short at the moment. The price action is very, very repeatable or happens often. Let me just change the color of the brush actually. Let's put this to red. Oops, sorry, hold on. There we go. Now you can see it. So it's very prone to having aggressive upside and it's not uncommon. So you can see it's very easy for traders to get chopped out. But if you can manage risk properly and you understand the general behavior of the market, you will see that this is often followed by a very aggressive downturn, which is very easy to capitalize on. Because if you manage to sell, let's say you sell the market here. Okay, let me just put this back there. So if you sell the market here or even down here and just hold the trade, you will be profitable at some point. So again, you could have DCA'd this and just held the trade and you would have been in quite nice profit. So I love this market to go short, but it can be pretty difficult to do. However, the technicals here look fine. So again, we've got the ECB that is looking like they're going to be cutting rates much quicker than the Bank of England anyway. So it does give us a slight policy divergence, nothing incredible, but again, following the behavior of the market, looking at this 200 daily moving average, we've got the fib golden zone, fib drawn from high to low. It looks very, very simple. We've also got pretty much a double top here. And again, this is a very mean reverting market, so it wouldn't be a shock if we do see lower prices. So I think Euro Pound is definitely one I'm going to be taking into next week, but we're just going to have to wait for a slightly higher move just to see if we can get into this 50%. Now, coming into the last few pairs, we've got gold and NASDAQ left. Gold, I still really, really love the narrative for gold. I think it's still a great buy. The problem is with gold, it's very difficult to get into. It's just not giving us anything. So get the rectangle here. So I would like to see this 50% retracement get hit, but that would be a pretty large move. Let's just see how large that would actually be. So this would be a 4% drop. What is going to give gold a 4% drop? I don't know. It'd have to be quite significant, really. So if we get very strong US dollar data next week, maybe, consecutively, we've got unemployment, we've got NFP, we've got ADP. If all these data points come out positive for the dollar or very, very strong, maybe we could see the gold, sorry, maybe we could see gold give us a pretty nice entry. But for now, I can't do anything. So it is just a case of waiting for a pullback, but there is nothing more. It's just buy gold on the next move down. Now, the NASDAQ and the S&P are very, very difficult in my view because fundamentally they're actually not bad. There's very, very little reason for this market to necessarily be dropping any further. What I can see is the weekly time frame here has a really nice support level. This would be a very, very clean reversion. So if you zoom out on a lot of these trending markets, so gold, Bitcoin, NASDAQ, the S&P, what you will often see is we have these points in time where the market will just revert, and it can be natural, it can be because of something, it could be COVID, whatever it might be. There will be something that happens where it will top out, it will come down to this weekly moving average, and then it will do something else and likely continue moving higher. Is this one of those times where it's going to revert and then continue higher? Very well could be, but the problem is I don't have any reason to actually think that is going to happen. So I'm not going to sit here and say that the S&P or the NASDAQ is going to crash. Let's just see here. This would be another 16%. Yeah, that would be a little bit too bearish for me to sit here and say that, but it's possible. So let me just show you the COT positioning that we had a couple of days ago. So if we look, we've had large amounts of selling on NASDAQ, S&P, and Dow. This is alarming because last week they were very bullish. They were buying up the NASDAQ, and that was one of the confluences as to why I bought the NASDAQ as a signal, was because one of the main rhetorics I was seeing in mainstream media was there's a recession coming, alarm bells are sounding, but there wasn't really any data to back that up. We saw the markets crash a little bit off the back of tariff news as well. We saw the Nasdaq and the S&P getting bought by institutions that week as well. So I was like, you know what, this is like a trifecta of perfectness. I can't pass the opportunity up to buy, and it's just not done what I expected. Now, again, that's part of trading. There isn't anything we can do about it. So it's just, in my book, waiting for the next opportunity to buy. I won't stop buying the NASDAQ or the S&P because you could say, if you're one of these people who is very scared about trading or very, very capital intensive or I don't, yeah, you know what I mean. So people will end up, especially retail traders and novice investors, will get very scared when the market starts coming down here. But imagine if you bought the market here and then it dropped again, you bought again at this point, and then bought again at this point. I'm talking more about long-term positioning, by the way. Obviously, this doesn't really apply to short-term active trading, but you would be up. Oh, sorry, you would have been up significantly. You still actually would be up at this point. So what I'm trying to say, and this isn't financial advice, if you have an investment account or you are wanting to get into the markets at some point and start investing for the long term, now is probably a pretty good time to start. I have actually put in a large amount of money over the past 2 weeks into the S&P, and I will continue to do so until it starts rising again. Then I might just relax a bit. But the point is, I'm trying to say is these markets don't just continue to drop. So my personal rule when it comes to things like the S&P and the NASDAQ is do not sell. And that means don't click the sell button, don't look to short the market. Just wait for some sort of pullback and then look to buy. Just follow. Imagine You know, you had a little downside move here. Imagine you sold there and you were holding the bag, then you tried to sell again here, sold again there. You would just lose and lose and lose and lose and lose. It's a sucker's game to short these in these markets. So try to long, but again, you might get chopped up, so just manage your risk. I'm not saying go full margin on the next support or anything like that. I'm just saying the opportunity is there if you're willing to take it, but the risk is high, obviously, again, with short-term trading anyway. So yeah, just take low risk positions and you should be okay in the long term. If you can get a huge runner and just trail stops, trust me, you will be laughing at the end of the year, even in 2 years' time, and you're still holding it. You'll be a very happy guy or happy girl. Um, just a quick look at some data, and then I'm going to call it a day, and we can go into some questions if there is any. So, as for the markets, we've got the Fed that is expected to hold rates in the next meeting. We've got the Bank of Japan that's expected to hike. We've got the RBA, so the Reserve Bank of Australia, expected to hold. We've got the RBNZ, Reserve Bank of New Zealand, expected to cut. Swiss National Bank is expected to hold. But they are in a cutting cycle. Bank of Canada also holding. Bank of England is expected to cut, and European Central Bank or the ECB is expected to cut as well. Uh, what else was I going to do? Bank trades here. So feel free to screenshot this. I'll put this into the Discord. Let me just refresh. I might need to log in. Yeah, okay, hold on. Let me just log into this again. Uh, so yeah, you can again feel free to screenshot the data if you do want to, but I do put it in the Discord whenever there is data changes or anything relevant. Okay, bank trades. So these are positions that all of the major institutions have made public or that are put in bank reports. So MUFG are in a US dollar CAD. Let's just see if there is actually anything interesting. They are long dollar CAD. I was discussing shorts earlier, so I'm curious as to why they're going long. Refinitiv is short on the euro US dollar with a trailed stop loss. HSBC is short on the Aussie-Yen. We've got Morgan Stanley are long. So they've got a buy limit on euro dollar at 1065. What else do we have? Goldman Sachs is also short on the Aussie yen. Maybe the Aussie yen is one that we should look at. Refinitiv, uh, they've just taken a long position on the pound dollar, which is interesting. Morgan Stanley also got buy limit here. We've got ANZ that's short on the pound Australian. And Danske Research, this is the one I was talking about at the start of the stream. Danske Research are in a short position on the Aussie-New Zealand as well, just like us. Their position is much, much larger. What else do we have? Currency strength. So this month we've had the euro as the top performer. We've had the yen as actually the worst performer, which is strange. But yeah, to be honest with you, that's pretty much it. Seasonality is not very interesting. I don't pay attention to seasonality too much with G10 currencies, to be quite honest. It's pretty redundant. It can give you a good idea, but it doesn't account for the macros or monetary policy or anything that actually move markets. So not a huge weight. But yeah, that is it from me. So if there is any questions, please let me know. Drop it in the chat and I will answer you. If not, we'll talk in the elite chat and I will see you on Monday as we start trading. I'll give you a minute or so if you want to type anything out. But yeah, in the meantime, there's pretty much nothing going on. So we're just going to wait and manage our positions with Dollar Yen, the Aussie New Zealand, and Euro Swiss. Nicholas, no problem. What do you think about Aussie Yen? The Aussie Yen. I think it's a good idea, but on the other hand, I think that all of these yen pairs are a good idea to the downside. Um, so Aussie yen, pound yen, euro yen, I like the idea of all of them. So if I was going to go short, I would really like to see. Uh, sorry, hold on, let me find. Where's the arrow tool gone? Where is it? It's here. So I'd really like to see the break, some sort of retest and a continuation to the downside. At the moment, I can't sell this. It just doesn't look right to me. And this would also likely line up with the fib at some point here. So that would be the setup really that I'd like to go for. Something like this, I think, So we will see. That will be the approach, but again, there isn't anything just yet for me to take. So, guys, that is it for today. I hope you all have had a good weekend. I will see you all very soon. I'll be streaming on YouTube tomorrow, as always, so you can always come in there and ask some questions if you need to. Have a great one. Thank you for joining, as always. I'll see you all very, very soon.